Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Wednesday, August 19, 2009. The euro rallied higher against the dollar in the New York trading, erasing its previous overnight losses and breaking above the 1.42 mark for the first time this week. The catalyst was New York equities pairing their opening losses, which pressured the greenback. The rally hit a high near 1.4265, which corresponded with a downward sloping line of resistance. At the same time, the euro slid further against the Swiss franc, extending its losses against the Swiss franc seen in the past 6 sessions. Though the pair has not reached it yet, we have seen the 1.50 level act as very strong support, as the Swiss National Bank has acted to push up the pair from that level with both its talk and direct intervention. So we'll see if another test of that level is in order. German producer prices slid sharply in July, declining 1.5% compared to the previous month, while annual prices plunged 7.8%. That was the biggest annual decline since the series began in 1949. It's a sign that deflation worries remain in the Eurozone's biggest economy, despite it coming out of its recession by posting positive growth in the second quarter. The pound weakened overnight as equities in London opened lower, and the Bank of England meeting minutes showed a central bank more focused on the weakness of underlying growth. The pound-dollar pair did find support at the 1.6375 level as European stocks paired their earlier losses, and the pound rallied to cut most of its overnight losses. Today's Bank of England meeting minutes showed that the bank's governor and 2 other policymakers had argued for a bigger expansion of its asset purchase plan in this month's meeting. The bank voted to increase the total they will spend on the plan by £50 billion to £175 billion. Governor Mervyn King wanted the program expanded to $200 billion. The underlying signal is that the bank believes that more asset purchases will be necessary in the next 3 months in order to keep money flowing into the economy. The dollar-yen pair slid further in today's trading as global stocks declined overnight. The pair's price action has developed into a downward channel following the big jump on August 7th in the wake of July's U.S. monthly jobs report. The greenback has now slipped to an almost 1-month low against the yen. Just like against the euro, the Swiss franc also had a strong move against the greenback, strengthening 150 pips from its session high of 1.0780 to trade near the 1.0625 level. The move in the Swiss franc could be a result of the U.S. government and Swiss authorities reaching a final settlement regarding tax havens, and also on speculation that the Swiss government might start selling off its 6 billion franc stake in UBS. In a sign of the momentum shift in sentiment today, the US dollar-Canadian dollar pair, which was rising overnight in favor of the greenback on an increased risk aversion, met resistance at 1.1112 and proceeded to fall about 160 pips as US equities and oil prices rose in New York trading. The move put the pair at a new weekly low, but stayed within its recent range. In fundamental news from Canada, consumer inflation was weaker than expected, with the monthly rate down 0.3% in July and the core rate flat for a second straight month. On the year, prices slipped 0.9%, fueled by a 23.4% drop in energy products compared to a year ago. Overnight, look for Switzerland trade balance data and data on economic expectations. Also, the UK will post reports on retail sales, money supply, and government borrowing. Tomorrow, the US will post its weekly jobless claims, the Philadelphia Fed Index, and its Conference Board measure of consumer confidence. Canada, meanwhile, posts its wholesale sales. And that wraps up today's coverage of the Forex market. Thank you for joining us here at CMSFX.com, and happy trading.